Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Jon Deluce, CEO of Abitibi Metals Corp. Trades on the CSE with the ticker AMQ. Hey, Jon, how you doing today?
Great. Thanks for having me. How are you?
Hey, excellent. Awesome. I've been trying to get you on for a little while. I know you've been busy. We've had some seasonality and some things going on, but really appreciate you taking some time here. Before we get too much into it, let's get our 60-second pitch out of the way. Question number one. What is the name and stock ticker of your company?
So Abitibi Metals Corp, and we trade on the CSE under the ticker AMQ and the OTC AMQFF.
What is your market cap?
Market cap today is 35 million Canadian.
What is the vision for the company?
The vision is clear. We have identified what we believe is a world-class asset, and we're in this to sell it to a major.
Why are you best to lead this?
I think my background as a chartered accountant brings a skill set that's needed in this business as a prudent manager of capital, and we build the teams around the asset that we're developing. So I think it's a unique skill set, but you look at Sean Boyd at Agnico Eagle, similarly a chartered accountant, we have a unique skill set that can go far at times.
How many shares are outstanding?
110 million as of today.
What is the insider ownership and how much capital have you invested?
Insider ownership between myself, management, family office is 30%. I've invested about $200,000 with my family office, investing over $3 million as a group.
Are you fully funded for 2024?
We're funded through to the beginning of 2026.
What are your short-term catalysts?
We're working on an updated resource, and we're about to restart drilling with up to 2 to 3 drills between now and the rest of the year for a fully funded, roughly 20,000 meter drill program.
Excellent. Thank you. Please comment below if you would invest in this company. Hey, Jon, thanks very much for doing that. Now let's move on to exactly what we all love to do. We're going to talk about ourselves a little bit. Yeah. Maybe for those of my viewers who don't know who you are, would you mind, discussing your background a little bit?
Yeah, so I'm a chartered accountant. So I'm from a finance background. I guess starting back of like who I am, my family office, how did I get here? Why am I in the crazy junior mining space? So my family office has been in the mining space for about 25 years. Led by my dad, and that started out as a private prospect generator. And what I mean by that is for a while we've had an annual flow-through budget of about $1 million that we've largely invested privately. And so we've staked or acquired ground privately. We've generated prospects. We've then vended them to juniors. We've sat as directors, strategic investors. But really, and that's led, we were one of the largest shareholders of Homer Gold that developed the West, what led to be the West Timmins deposit that was put into production with Tony McCooch and Eric Kallio at Lakeshore in the West Timmins camp. We were large shareholders of Beaufield and royalty holders of now land around the Windfall deposit in the Urban Barrie area owned by a Cisco. We have royalties at Barrick at the Hemlo, north of the Hemlo mine. So we have a collection of a royalty portfolio that we've accumulated over the last 25 years. But really, we made the switch from the private market focus to public markets about 5 years ago, when we were tired of financing deals and really leading into some of these lifestyle companies where we provide good assets, expertise, capital. And it's a very risky business. Certainly, the majority of these companies will not work out, but it's one thing to at least deliver on your business plan and give shareholders the best chance at a discovery or a development as you can. So I was at Ernst & Young at the time. I was at Ernst & Young in mining consulting. I worked with the majority of the majors across North America and Australia over the period of 6 years. Gave me time to really get an understanding of what the majors are looking for, build up my contacts amongst them. And I left Ernst & Young in Toronto to found what was Gold Seek Resources that we renamed as Abitibi Metals in October of last year, really leading into what has been a company-making acquisition so far, and we believe that we're just starting. So I guess to get back to your question, we're a diversified family office. We're known for the airline business. We have a large real estate company, and I lead the mining division of our family office. But we really pride ourselves on prudent capital management. We completed our first quarter 13,500 meter drill program on budget, under $250 a meter all in, which is extremely competitive compared to our neighbors in the camp. So I think that's the main thing. We pride ourselves on having over $3 million in the company. Very hard to find amongst especially small cap junior mining companies. And really, we are in this alongside our shareholders to realize the liquidity event. Because between the asset and between the market, we think we're coming into a time that's going to be very beneficial for everyone.
Excellent. You mentioned airline business. What airline would that be?
So going back to my grandfather, so he started in with a small bush airline in White River and Timmins, Ontario. That grew into Air Ontario that was sold to Air Canada. We then had Canada 3000. We were also the founders of Air Quebec, which was a First Nations partnered airline in the province of Quebec that's still operating today. And most recently, we were the founders of Porter Airlines that operates out of Toronto, Ontario.
Great airline. I love flying those planes. Good stuff. Very, very cool experience. Thanks for going into the background. So on that note, let's turn our attention. Could you give us a bit of an overview on Abitibi and its primary focus?
Yeah, so we've built a company based out of and focused in Quebec. We strongly believe by operating in numerous jurisdictions that Quebec is the best province in Canada by far. And we believe that that's the case with government support in terms of permitting, great partnerships with First Nations, the financial support through like getting 38 cents back on every dollar hard money invested in projects, the Quebec institutional support, and the mineral endowment in the Abitibi. And really, as I mentioned earlier, exploration is a very high risk business. 50% of copper production worldwide is in areas of political instability. So and we've had this happen within our own investment portfolio. You make a discovery, you make a serious development, but you got to know that you can actually realize the value from that without government intervention, without permitting risk. So really, we pride ourselves on operating in Quebec and now partnering in our option agreement with a subsidiary of the Quebec government, SOQUEM. And really, even that speaks to the strength of operating there. We've optioned the B26 deposit that has never been in a public company, that was developed by SOQUEM, which is basically a private company financed by the government of Quebec. So a Quebec government exploration arm, and that has led to having a starting resource of 11.5 million tons at 3% copper equivalent. So without that strong government support for mining, you don't have opportunities like that. And that's why we're very grateful to the Quebec government and to SOQUEM for allowing that opportunity, because I probably won't get a second chance like this in my career, that we are starting with an asset that has, as I said, never been in a public company, is in a recycled deposit that's been through 2 or 3 cycles. And you have to say, well, how did the last 4 companies not make a success with it? What are you going to do differently? So it's really positioned us uniquely. And I think the market has realized that value arbitrage. We announced this to the market in November of 2023 at a market cap of about 5 million. We have since grown to be from 5 million up as high as, I believe, 65 million. And now we've settled back with a consolidation period over the summer at 35 million. But really, we've gone from a small company up to operating 3 drills in March and drilling 13,500 meters in the first quarter on what we believe is a company making asset. And I'm sure we'll get into that further, but maybe I'll pause there. I know I get off on these tangents, but we're excited about
No, that's great.
the story we have.
Yeah, that's great. We love the detail. That's what it's supposed to be, 95% you talking and 5% me. So all good. I guess a question for you, is the company focused on copper or gold?
So we are a copper focused company now, but as Mark Bristow and a lot of the titans in the industry, the demand for copper gold deposits is the top of focus to a lot of the majors at the present time, especially given in looking at the VMS model that we have, which is a copper gold focused lens with a parallel zinc silver. You look at like the Larone deposit owned by Agnico, which was really a fundamental asset to the growth that Agnico has had. That is a polymetallic. It's a gold focused one, but the base metals really helps improving the margin at that mine. And the thing is we look at B26 as of today. Copper is the focus, but we're the first operator that has modeled out the gold on its own. And we have identified some of the higher grade plunges on the gold system. So we view it as a copper focused asset with the gold sweetener and the additional sweetener of the zinc silver and this strictly VMS lens. But we really do think this is the type of deposit that the majors want. And they're very hard to find. You look at 4N Mining that just announced $350 million of financing with Agnico taking a 9.9% position in Saskatchewan. So it really shows, and still a tough overall market, the demand for these polymetallic deposits, especially in a jurisdiction like Quebec.
How does Abitibi differentiate itself from the thousands of mineral explorers that are out there?
So I think, how do we differentiate ourselves? I think from incorporating and going through the different stages of exploration from when I brought the company public in 2020. We came public with 2 grassroots assets. We put together a solid plan, but grassroots exploration is very risky. We then optioned the Beschefer Gold project that's 7 kilometers away from B26. We drilled 9,000 meters, had some very good gold results, but again, the trade for gold was off and we weren't getting a lot of traction in the market. But then we leveraged our contacts to then look at, okay, what's a larger scale asset that we can restart our activity, reduce a lower cost of capital that will really stand out in this marketplace? Because we've had a pretty dire junior mining market for the last 2 years, but tough markets bring good opportunities. And that's what we found with B26. So what differentiates ourselves is we've learned the hard way what we need to do to have a junior mining company that stands out in this market. That is to have a strong resource that is truly open, that has the potential to be a world-class deposit. And really, that's what you need to push through the current market conditions. Now, I think we're around the corner from a market that's going to be very explosive, that grassroots exploration will get huge value in the marketplace. We're not there today, but we have recognized the market for what it is. And that's why we've been able to raise $22 million, largely with strategic shareholders with no warrants, which is a big differentiator from our competitors in the space, because we do pride ourselves as largest shareholders of the company to raise money at the right time, to limit dilution, to keep the stock responsive to positive developments. So I think to summarize a tangent once again, we have a really what we believe is a world-class deposit that we're developing. We're now fully financed to the beginning of 2026, which is a big differentiator from my competitors. And we are fully funded to drill about 36,500 meters of drilling between now and the end of next year. And we will be completing a 7-year option agreement with SOQUEM within 2 years, so 5 years ahead of schedule. So I think we are very excited about what we've done to date, but we think this is the very beginning, and I'm sure we'll get into the many catalysts. But we've been working hard behind the scenes during what I guess you could see as a consolidation period. We've had about a month and a half off of the drill program, but we've used that to hire. We've done a lot of modeling to understand what we've done, what we did in the first phase of drilling. We've updated our internal resource, which has been very positive, and I'm sure we'll talk about that topic more. But I think I'll pause there for a second, but I think there's a lot of things that come together.
You're chomping at the bit to talk about B26 a little bit more. Why don't we sort of get into it? Maybe you could discuss this project. Just go over again how you acquired it, what the sort of what the 7-year sort of option terms are, what sort of ownership you'll be able to sort of earn in on that. I was doing a little bit of review. So I guess prior to your involvement with the project, it had 254 drill holes, about 115,000 meters of drilling. And they came up with, a relatively sort of small indicated and inferred resource. So how do you think you can get it to be bigger and attract the interest of a major?
Yeah, so I guess how did we acquire it? So we optioned the Beschefer gold project in 2021 from Wallbridge. As I mentioned, that project is 7 kilometers away from the B26 deposit. So we were aware of this project since 2021, and it was on our radar as something that we wanted to provide the right value proposition to build a partnership with SOQUEM at some point. But it takes time. SOQUEM, I think, rightfully wanted to find the right partners that really, they're in this to see this developed into a mine. They want to see jobs created in the region, and they want to see somebody that gets a lot of value for what is really a work commitment focused agreement. So our deal with SOQUEM is we have a 7-year option to earn 80% of the project. That is broken down in 2 phases, but given that we're now fully funded for the whole thing, it's really kind of like one phase. But so it's $14.5 million in work commitment, which is now fully financed, as we have a $15 million exploration budget between this year and 2025, $400,000 in cash, a 9.9% equity position in the company, and the delivery of a PEA at the end of those obligations, which we have planned for the end of next year or early 2026. So at the end of that agreement, it will be an 80% Abitibi, 20% SOQUEM, with both parties having to maintain the investment going forward to maintain their respective interests. If SOQUEM didn't elect to participate, they'd be diluted down to a modest 2% NSR with a 1% buyback. So as I mentioned, we're fully funded to complete that option agreement. So we will own 80% of the B26 deposit as at the end of next year. And really, we don't view the 20% as a hindrance by any means. This is a partnership with a government subsidiary. They're invested in this to see this developed. So we see that as a complementary partnership versus it being sitting with a major or a junior that could try to use that and leverage it against the project's best interests. So I guess to your comment about the historical drilling and the size at the moment, I think that's part of the upside that we saw when we were doing due diligence on this asset. The 2018 resource was done at 5,500 per ton copper, so about 260, like $1,200 gold. I think it was like $16 per ounce silver. So about half of today's commodity prices. So we think that and you look at the sensitivity assessment that was done in the 2018 resource, if you drop the cutoff by 20%, the resource was about 15.5 million tons. So we believe, and part of what we've started to announce to the market and guide the market on is we believe as of today, there is a material difference between the 11.5 million tons that was stated, combined with the move in commodity prices and our Q1 drill program. So we have updated our resource internally. We're very excited about that. We believe that we have delivered on the open pit thesis that we outlined to the market as part of our phase 1 objectives. The open pit in the 2018 resource was immaterial. They didn't put much of a focus on that. I think it was 800,000 tons, which made sense at the time given commodity prices and given the high grade vertical nature of the deposit at that point in time. But part of what we've been able to deliver in the first phase of drilling is we've been able to identify a new satellite target to the west. We've pushed the north bedrock interface of the deposit to the north to help build a better potential pit shell. So I'd say as of today, we believe that the resource is materially larger than that resource statement. And we are working with an external resource consultant to potentially bring out an update as early as September.
Excellent. Thanks for sort of explaining that. In terms of, I was going to ask about underground versus open pit. You've already explained that. That's great. Do you think that there's further sort of like exploration upside? Where is the deposit still open in any directions?
So historically, in some of there was like PhD coverage on the project where some students doing their thesis around it. And really, this was viewed as in the past as a vertical deposit. Now, from our modeling work, from our phase 1 drilling, we strongly believe that there is a western plunge that controls the mineralization at the B26 deposit. And that was supported by the limited drilling done by SOCOM at depth 236 on the western side of the deposit that really has nothing down dip, has a 300-meter gap up dip, but it intercepted 5% copper equivalent over 7 meters amongst 1.4 over 40. So that was really the boundary of the deposit to the west, and that will be a focus for phase 2 drilling. We've designed holes up to 1,450 meters in length to test that western plunge. We've also designed both the use of wedges and DVCO directional drilling to be able to use pilot holes and cost efficiently test this expansion, because still we're not a large junior, but we do look at every dollar that we spend to get the most out of it as we can. And using 1,000-meter vertical holes and directional drilling off of that to basically cover a 300-meter gap on the deposit, we think could be very cost efficient and is part of what we'll be testing. But again, to loop around, so clearly our thesis, and we're going to bring this out to the market, and we've mentioned in presentations, is we think that there's a strong western plunge. That's where the thesis of us believing that this is a 30 to 50 million ton target is largely on that western plunge. We are confident that we've delivered on the open pit thesis and pushing it out to the north and a bit to the east. However, to the east, there's less expansion potential with the larger amounts of overburden. So we're very confident on the western plunge of the deposit. So yeah, I think the western plunge, building up the open pit material, because really between part of what we proved out in phase 1 is that there's a lot of low grade material, disseminated material outside the high grade core. And I think that will be reflected through a potential resource update that we come out. So I guess to summarize, western plunge, building around the open pit, the satellite west target that we newly identified in our Q1 drill program, that's 500 meters to the west of the B26 deposit. So that's a standalone lens that we believe has a northwestern extension that's never been tested. So there's a bunch of objectives that come together to support why we think that there's large scale potential of expansion at B26.
For this style of polymetallic deposit, how many millions of tons do you think you need to have before you'd attract the interest of a major?
So that's a question that we are working through right now, because we've started to have those discussions with the majors even this early. So I think the biggest questions that I've got from strategic investors and majors, well, especially one very well-known strategic that I can't mention yet, but hopefully down the road, is what is this worth? What is this worth as of today? And is there a gap between your current market cap and the value of the project? And the answer is right now we don't know, because we don't have an accurate resource that reflects today's commodity prices and puts us apple to apples with our competitors that have published polymetallic resources at significantly higher market cap, significantly higher commodity prices than we have. So step one, we've updated internal resource. Step two is we're presenting our thesis to our external resource consultant. Step three, hopefully we can bring that out to the market in September, October. And then I think that will be a basis that we then build off internal economics to really answer the question as to what size does this have to be to attract a major. But let's get back to the Sal Bay. The Sal Bay mine is 7 kilometers to the northwest. It was in production for over 20 years and produced 53 million tons of similar polymetallic material. It went into production at 20 million tons with an open pit that they ramped into underground, very similar to the thesis that we're trying to prove out. So I think if you look at the sensitivity testing on the 2018 resource, we'd be at roughly 50 million tons combined with, I guess, what we're seeing internally. We don't think we're that far from that initial benchmark that Sal Bay went into production. But this is part of the larger pipeline of objectives that we're working on behind the scenes that we're able to have those conversations with strategics and majors. So
Great.
Yeah.
And since you acquired the project, how many meters of drilling has been done at B26?
So since acquiring the project in, I guess, Q1, Q2, we completed 13,500 meters of drilling. That was largely focused on the first 300 meters vertical to test the open pit thesis that we outlaid to the market, extensions on both the western and eastern sides of the deposit, which were both successful, and to infill what is largely 50-meter centers on the deposit and infill some of these higher grade shoots, which we were successful in intercepting about 11.5% copper equivalent over 10.6 meters. So very high grade and some nice continuity on that.
Excellent. And let's turn our attention to Beschefer. So that's a project that the company originally had when the company was first taken public, I guess, by yourselves back in 2020 or 2021, if I'm not mistaken. Yep. How do you see the project continuing to fit into your sort of overall strategy as we've got, a bit of an explosive gold market here the last while?
Yeah, so Beschefer we view as a good complementary asset to B26, given that it is 7 kilometers away and is on that same mafic contact. And we do in the western lens at Beschefer, we do see some presence of some of the polymetallic alteration signature, and we do see some lower levels of calco within the system. So we do see a potential VMS setting within the Beschefer system as a whole. We just haven't been able to identify that specific lens yet. But where we see the potential is in Q1, we did drill 2,300 meters at Beschefer. We undertook higher risk extensional drilling on the east zone. We were successful in extending the east zone 100 meters to the northeast. We also extended it up dip. Lower grade results than we were hoping, but the important thing is the mineralized zone hasn't been cut off yet, and it is completely open to the northeast up dip. So the important thing is we've extended the zone. The continuity is there. We hit the zone with about 15 meters in width, only about 1.5 grams gold. But still expanding it, there's higher grade shoots amongst the deposits. So we'll be back drilling there this year with another about 1,500 meters. So it's certainly not our focus, but we do view it as a nice complementary asset that could be part of a central camp PEA that extends across both the Beschefer and B26 deposit. So good complementary asset, but certainly our focus and 90% of our expenditures will be focused on B26.
Have some of your strategics and other sort of investors, have they sort of asked about if it's maybe confusing to have sort of both projects kind of discussed when a lot of your sort of marketing and focus sort of late last year was sort of around copper, 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 copper.
Well,
Has anybody ever, had there been some internal sort of discussions with some major shareholders about how to be able to walk and chew gum at the same time?
I think I haven't really had a lot of pushback with the two, I guess, in my view, complementary stories. I think really part of the reason why we're drilling Besh for this year is to complete our option agreement with Wallbridge. We only have another 1,500 meters to go at Beschefer. And then likely we will pause drilling at Beschefer for the foreseeable future because we do see a better return on our capital within the B26 deposit. So really, we are doing this. We like the Beschefer project, no question, but we are more or less focused on this to complete our option obligations versus feeling that the budget is more warranted on Beschefer. So with full transparency, once we complete the option agreement with Wallbridge, we will pause investment at Beschefer for the time being until we get to a point that warrants our capital investment there versus B26. And for the foreseeable future, there's more value we're going to create at B26 with what we're uncovering.
Great, that's an awesome answer. Thanks for getting into that. Hey, let's turn our attention to the copper, Dr. Copper, they call it. It can be a bit of a canary in the coal mine, so to speak, where its ability to predict sort of overall health of the economy. Copper prices are down about 20%. It's been in the last 2 months, been a really rough July. What's that saying about our economy? Any thoughts on that, on the price of copper?
Well, I think that we had a very explosive run. I think we're going to see consolidation periods amongst that time. But I think with the copper economy as a whole, you look out to 2030 and the supply demand deficits that they do see on the supply side with the decarbonization, with AI, with this amount of infrastructure that needs to be built to support just general infrastructure. So there is such high demands of copper that even if we see a bit of weakness in the economy, there still isn't nearly the supply to keep up with the demand forecast that is there. And there's been underinvestment in exploration. The permitting time for mines is extending. So really, I'm very bullish on the copper price. I think also we kind of have a revolving circle that we're going through that's kind of fueling the copper price. That's why we're very happy to be in the copper gold space and why we do see a very, very promising 10 years and short term in the copper space. And also, I think there's going to be more and more importance on where the copper is coming from, especially as we get into more and more supply copper shortages. And you look at Panama and the large copper mine that was taken offline that makes up a material supply of the copper market. So I think that there's different factors coming together, but I think my overall thesis is very bullish on copper, especially in tier 1 jurisdictions.
All right, let's turn our attention to the financial side, cap table. Can you give us a breakdown of your cap structure? How many shares are out, options, warrants, RSUs, DSUs, things of that nature?
Yeah, so we have 110 million shares outstanding. We have 2.5 million options outstanding at an average price of 20 cents. So those are held between myself, management team, which we haven't exercised them. We're long on the stock, so that's in friendly hands. There's broker warrants out for 700,000, broker warrants at 77-cent average. So there's no warrants, general warrants out on the deal. So compared to our competitors, I think we financed this very well. There's very little overhang on the stock. So being financed out to 2026 with a potential resource update on the way with 36,500 meters of drilling to come, I think the stock will be very responsive. And we sort of have what I believe is a short-term opportunity over the summer. Our last financing was done at 42 cents a share. On the hard money. We're trading today at about 32 cents a share. And that was done at no warrants. So we are seeing the impacts of what I think was a lot of tax capitalization selling going into the capital gains changes on June 25th. We were one of the few names in this market that has had a strong return over the last year or so. So I know for a fact we were targeted because of that. Combined with a slower summer, we haven't been drilling, but really we've done a lot behind the scenes to set up the company for what I believe will be extremely positive fall when the market is back from the summer and everybody's paying attention again. And when we start to ramp up on drilling, ramp up on marketing, and really showcase what we've done over the summer. So the breakdown, myself, family office, we have 30% of the company. 20% is filed on SEDI. 10% is in our general family fund and other family members. High net worth and strategic shareholders make up about 31% of the remainder of the float. Wallbridge has 2% of the company. We have overall smaller makeup of institutional shareholders. They make up about 9% of the company as of now. So we estimate the public float, retail float at about 28% of the company. So still very well structured. We still have about $16.5 million in the treasury. So that gives us that pipeline out to the beginning of 2026.
I see you're able to announce in one of your earlier financing, sort of, I guess, late last year, Frank Giustra and Greg Chamandy as strategic shareholders. How'd you get in front of them?
So I work with my my brother, and my brother works very closely with the Fiore office. So I presented the value proposition of B26 and what we were assembling at Abitibi, and Frank participated in the first financing after announcing the B26 acquisition and has since participated in further financing. So we appreciate his support, and I think he's recognized what we've seen in that the B26 deposit is a rare opportunity. And there's not a lot of serious polymetallic deposits across Canada, but the ones that are there command a premium in the marketplace. Greg Chamandy, we've worked with and been investors in some of the companies that he's been involved with in the past. And again, we outlined our vision, and I think he similarly saw the value of what we're putting together. And we also have, like, Victor Cantore, we recently announced as a strategic advisor that's a shareholder of the company. I appreciate Brian Slater, Chuck, on your show mentioned that he was a shareholder and participated in our financing in April. So really, our shareholder base is made up of high net worth individuals, and we have seen profit taking, but I think it's led to, I think, a short-term opportunity here that we're trading at a 20 to 25% discount at the April financing, but we're committed to turning that around quickly, and I do think the catalyst coming together will surprise the market this fall.
So you took advantage of a type of financing, a charitable flow-through financing. They seem to be sort of all the rage, earlier this year and last year. And could you sort of walk us through sort of how that works a little bit? You know, there's usually they're announced and it's like a pretty big premium to the market price. And then there's also a back end component as well. So would you mind walking us through sort of how that sort of function, how this style of financing works?
Yeah, so it varies province to province, but part of the advantage of Quebec is it has the highest flow-through delta in the country. That's because the Quebec government offers the largest tax incentives of any province to shareholders that are taking the flow-through. So how it works, let's take the April financing. So we did a charitable front end at 80 cents per share. because Quebec has such a large incentive program, the delta on that financing was 2.06. So we were able to sell the back end at 42 cents per share from a front end of 80 cents. So how that works is we raise the money at 80 cents. The custodian that facilitated the financing on our behalf went out to find buyers of the stock that just wanted the flow through benefits. So they subscribed for 80 cents. They get the write off to their personal tax return, and they get some return on that, but they don't get the underlying shares. They strip the tax benefit that essentially is worth, in the 80-42 example, is worth 38 cents a share that is left with the subscribers on the front end. Then we're able to take the back end and sell it to longer term shareholders that see the vision, that aren't in it just for the tax incentives. So we were able to place that 42 cent offering largely with a lot of the same participants from the 30 cent round in December. So the advantage of this is it allows us to raise more capital while limiting dilution, because we're able to take in money at 80 cents and distribute the back end to firm shareholders at 42 cents. So basically it allowed us to raise double the money than if we were to do a hard money offering at 42 cents.
Excellent. Thanks for walking us through that. Can you just say again how much capital you've raised since November?
So since November, we've raised $22 million. We've probably had another $500,000 to $750,000 in warrant exercises. So we have grown from a 5 million market cap company up to as high as 60 to 65 in basically a 6 month period of time. So right now we are trading at 35 million. We have leaving an EV of just under 20 million, given that we still have about $60.5 million in the treasury. So really, it's a good time in the summer doldrums to take advantage of what we think is a short-term opportunity, where we are trading at a discount to our last financing, and no warrants that can be clipped from any of those financings with raising that $22 million.
Are you at all surprised with where it's trading at right now?
I am surprised. I think that there was more profit taking than I expected from the financings. We did place these financings very well, but I think it also speaks to the lack of liquidity in the market as a whole. Even some of the high net worths are everybody's, I think, having similar liquidity issues because the space as a whole isn't performing. So I think there's not a lot of names that are making money. So I think as a result, combined with the tax changes, we saw a lot of selling going into June 25th. And really right now, it's been a quiet period, but it's not for a lack of what we've been doing behind the scenes. We've been hiring, we've been doing a lot of modeling, we've been presenting the story to well-known companies and names. So I'm not happy to be back at 32 cents after the run that we had early this year. But at the end of the day, I'm not panicked at all, because we have the underlying value with B26. We have a strong shareholder base that has been taking advantage of what we believe is a short-term opportunity in the stock. And we are fully financed out to 2026. So we will not be forced to take a dilutive financing anytime soon. So I think we're in a great position. As I said, I'm surprised where we've come back to, but I'm not worried at all. We're building a lot of value here. We have a clear plan for the rest of the year, and we're very excited to restart the drilling and continuous news flow in the short term.
Sounds like an opportune time to have you on the show. So thank you for accepting the invite. What are the main catalysts that investors should look out for over the next sort of 3 to 6 months? I know you've mentioned a few, but maybe you could just sort of summarize them again.
Yeah, so I think the biggest thing is ongoing drilling. we'll drill between 16 to 20,000 meters between now and Christmas, with up to 2 and potentially 3 drills during that time. So there'll be lots of news flow. And I think really what we said to the market is we believe this deposit has the potential to grow to 30 to 50 million tons. That's a big claim to make from 11.5 million tons, but we are going to start to support that assessment to the market so that we can show a clear growth profile, start to drill against it at depth. And I think the market will start to give us credit ahead of where the resource is if we do a good job in painting and supporting that thesis well. So as part of that, we've updated our resource internally. We are in the process of presenting that to external resource consultants to try to bring out a resource in potentially September or October of this year to demonstrate what we've done in such a short period of time. And I think if we're able to hit the numbers that we've demonstrated internally, I think we could really surprise the market. So we are working hard on that. So I think a potential updated resource, ongoing drilling. We also completed a property-wide gravity survey. So the B26 has a 1.6 kilometer strike on an overall 8.3 kilometer targeted trend. So this is just a small footprint in where we are in a VMS camp. So VMS deposits occur in pods. We have B26 deposit, we have Salbay to the northwest, we have the Beschefer Gold project to the northeast. So this is a highly mineralized system on this mafic contact. So what the gravity has done for us, it has identified a clear target trend outside of the B26 deposit. We are going to do some additional inversion, taking into consideration the depths of overburden and the geology from the limited drilling outside of the B26 deposit. So one of the theses that we want to present to the market is standalone drill targets outside of the B26 deposit to make a brand new discovery within the B26 property as a whole, which we believe is very underexplored outside of the main deposit. And part of our thesis is that the Salbay and B26 is on the same contact that runs through the project. And part of the gravity is looking at that higher density of the sulfide-rich zones against the host rock at a lower density. And given the amounts of overburden, EM in the area is noisier. So we do think that this is the metric that is going to be able to help us map out that contact and put the company in the best position possible to make a brand new discovery at B26. So that is part of the story. We will be drilling standalone targets outside of B26 between now and Christmas to try to make a brand new discovery at the project.
Yeah, excellent. Well, that sort of about wraps it up. Any final thoughts you want to leave us with?
Yeah, well, I appreciate your time and the opportunity to introduce the story to your audience. And I would thank our shareholders. There's a lot, as you said, there's thousands of names out there. It is a tough marketplace right now. And we are appreciative of all of our shareholders that gives us the opportunity to do what we love at Abitibi and really I think we're still in the early stages of getting our story out there and really demonstrating what we have at the B26 deposit. So yeah, no, I appreciate your time, and I'd just like to thank our shareholder base and anyone considering our story, because there's a lot of companies to choose from.
Hey, excellent. Well, we certainly will want to stay up to date on it. So we'll get something in your calendar sort of in the next quarter. We try to do sort of 4 videos a year. This is our first look at your company. So Jon, really appreciate your time. I'll let you get on with your day, your evening. Thank you very much.